what you're looking at here is our ROI calculator, and it's a great way to play with the numbers so you can see exactly how profitable you can be, how the return on investment can be. It is truly a no-brainer, and that's why we built this, just so you could do the math really easily, right? So I'm going to dive in here and kind of explain how this all works. And point out a few things. So below here, just as a reminder, we have like the cost of our program, so you can see that. And then over here are statistics, right? The average statistics that we know are happening. So that will help you understand what's going on in this calculator over here. Another thing I do want to point out real quick is you should download this and play with this so you can plug in your own numbers. But up here, you can see adjustable and calculated. If it's a column that says calculated, don't touch any of the numbers in it because it's already pre-built to calculate off the other changes you make. It's adjustable, then you can make all those adjustments that you want, right? You can add or subtract things based on your situation. And we'll talk about each section here real quick too. So here in this yellow section, it's all about the cost for services, cost for ads, the leads, and what you should be able to generate just strictly off the leads themselves, right, as business. So we have all those calculations there. In this orange section, this is really so you can project into the future, right? It's more of your long-term vision so you can understand where this can all take you. And one thing I'll point out here with this column, time and months before first funding. Usually I just recommend people come into this with the mindset that's going to take 3 months before they get their first check from the leads they're generating. Is that always true? No, absolutely not. A lot of people, a lot of clients and students definitely get deals done well before that. But obviously, if you just come into it with that worst case scenario that my first funding is not going to happen for 3 months, then you're in a good spot. I kind of like to paint a negative picture so you can still see how positive this all comes out, right? So if you're just going with the worst case scenario, then these are the kind of the numbers you're looking at. Now the blue section may actually be the blue and the red section may actually be the most important part because most people, our most successful clients and students, really, I should point this out, are utilizing the system, not only just to generate leads and business from that, but also to get referrals from agents. And if you've never been in the position where you can actually give out referrals to agents, you may not realize just how powerful it is. Our average student client will actually get more referrals back, 2 to even 3, for every time they send a pre-approved buyer to a realtor. And I'll point this out real quick. You probably already remember this, but if you don't, 95% of the leads do not have a realtors yet. So the vast majority are referable, right? You can refer most of them out. So that's what these have been calculated for. We just put this adjustable column, for instance, is you'll get 2 back for everyone that you refer out, right? So you could adjust that and change that. Let's say you're like, oh, I really just hate agents. I'm not good at talking with them. Even if I do have a deal for them, well, then cool, make that a 1, right? So, and it'll change your profitability. But then here, this last column, we're just calculating your total revenue generated from all the leads in the business generated from the leads, and then also the business that's generated from the agent referrals that come back to you out of it. So if you take a look here, it's pretty darn easy to make money. This is 1 month, right? 1 month. Now I'll point this out. That doesn't mean you'll get this back in a month, right? Let's say you have a referral or you have a person, you turn them into a pre-approval. It takes 3 months before they buy and they actually close the deal and you get your check. And then it may take another couple months for the agents to give you some referrals back that work out. Well, this $18,000 isn't going to come in the first month. This could be, based on those 2 factors, which is time to close for the one person and then the more referrals to come back and those to close. This could be, 5, 6, 7 months down the road. But if you're doing this every month and you're building up so that 5, 6, 7 months down the road, you're making this every single time, every single month, it adds up real quick, right? And so it's super important to understand that. So a couple things to point out here real quick too. So we have the 3 rows here. One is for our basic client package, one is for our elite client package, and the other one's for our training program. So depending on which package you want to consider here, you may want to play those numbers. We do know, and I have it down here, average cost per lead is about $6 to $7 around the country. So you can mess with that a little bit if you want to reduce it or increase it. California will be a little bit higher, typically closer to $10. Some places are actually a lot cheaper, $3, $4, $5. So if you just keep $6 or $7 in here, you're at a pretty good average, right? Closing rate. We know that if you follow our best practices and really truly implement this the way we show you to do it, whether you're a client or a student, and we will help you a lot with that stuff, whether you're a client or a student, you should actually be at about 5%. That's what your closing rate should be. But you can downplay that a little bit. Let's assume you're not very good at this, or you just know that your closing rate's kind of low. Well, adjust that. Now, average revenue per closing, that's something that you're definitely going to want to adjust, because that's going to be different based on your comp plan and the market you're in, right? So play with that a little bit, adjust that. I know that 2,000 to 2,500 is a pretty average sized amount of revenue across the country, but some of you obviously will live in markets or have comp plans that are a lot better. So it could be 3,000, 4,000, 5,000. So just play with that yourself as you go and do the math here. And then I'll talk about, if you're looking at our training program, it's worth looking at this and understanding what we're doing here. So you're in the training program, your monthly service cost is actually, your service cost is your software. It's $200 per month. That's what you're going to have to pay in software. So you don't need to adjust that. And then obviously your ad spend, what we typically recommend is you spend $20 to $30 per day. So your minimum ad spend is probably $500 or $600, right? $500 or $600. If you want to increase it, cool. You probably should play with that so you can see what increasing it can do. But lastly, this row right here is don't adjust anything in this, because this is all calculated for the training program. And so what we've done over here in this section is we're deducting the cost of if you joined our lifetime package. That's a $3,500 package, right? If you got into the training program and you spent $3,500. Obviously, we have a cheaper one where you can spend just $1,000. Let's just say, hypothetically, again, worst case scenario, you decide to buy the most expensive one, $3,500. That's what you spend. Then you get all these numbers that are deducting that cost, right, of $3,500. So you can play with this pretty quickly, pretty easily, see how profitable this can be. And yeah, mess with it. Download it. Check it out. It's a no-brainer if you do the math. And hey, if you're in the mortgage business, I certainly hope you're doing some math. Take care.